Hi there, and welcome to our third Dreams to Doors webinar. We're excited that you've all decided to join us tonight. Super excited about tonight's topic. It is called "You're in Contract, Now What?" This is tonight's session is designed to really help you out with those next steps. You put in the effort, you've got your loan approval, you found the perfect home, contract has been accepted, and so now we're going to talk about a couple of the next steps. So what happens when we get to those next steps. So with that, I'm going to start to share my screen so that everyone can see it. Great. And then we're going to kick things off. And so, oops. Tonight we're going to talk about, with Anthony and I'll give you a quick welcome. We'll talk about inspection basics. I'm sorry, those are insurance basics with Stacy Logan, not inspection. Insurance basics with Stacy. Debunking disclosures with Annette Kalik and Anthony and myself. Get into Q&A and then a brief wrap up. So um, just wanted to say congratulations again on taking the first step as first-time homebuyers. We know that this is a big step, and we are so excited for your journey. Most importantly, we are happy that you've chosen us to help you get through this journey and make it a positive experience. So with that, I will go ahead and turn it over to Anthony for the next part.
So as always, just want to convey this and reconvey it over and over again. We are your best resource when it comes to questions, getting you clarity on stuff that's going on in this very huge, fantastic part of your life. We know it's a big moment. It was a big moment when I bought my first house. It was a big moment when Glenn bought his first house. And we want to make that as smooth and memorable as possible. We're excited for you. We're there with you. And don't ever feel like you can't come to us when something pops up. We want to make this, again, such a wonderful experience for you that you can't help but share about it with everyone you know. So, yeah, go ahead. Shoot it off.
Thanks so much, Anthony. So tonight we have two experts with us, and our first expert this evening is Stacy Logan. And Stacy is going to talk to us about some insurance basics. She is from Gene Morgan Insurance, and there's just a few bullet points here. But with that, I'll go ahead and turn it over to Stacy.
Good morning, or good afternoon, or good evening. I guess it's good evening at this point. It's been a long day. I hope you're all well. And thank you guys for having me here today. I really appreciate that. Insurance is the topic I think that is at the top of the news a lot lately. And we want to kind of take the myth away from it and not scare everybody. But insurance is one of the most important things you need to get in line as soon as you make that offer on the house. And in some cases, before you put an offer on a house. As you have all known, insurance rates have gone up. It's due to inflation. It's due to goods not being available. It's due to lack of labor to build new homes. It's a whole lot of things that have kind of created the perfect storm. And of course, with all the big losses we've had over the past few years. But every home needs to have insurance. If you are looking in an area that may be harder to insure, like Lafayette, Oakland Hills, Pleasanton Ridge, Danville, Alamo, those areas, you're probably going to be looking at less options that are going to be available to you. And what is out there is going to be more expensive. So you want to have that talk with your realtor and your lender. Find out what your insurance premiums may be. And if you need to maybe not shop at the very top of what you were approved for, just be prepared for that. Call your insurance agent. Most of you already have auto insurance, and hopefully you're working with a broker or an agent that's local to you instead of shopping online. That way you've got someone that you can go to right away, ask these questions. Once you've identified that house, call them, give them the address, and see how much that premium is going to be before you put that offer in, if you can at all possible. Make sure that you're going to be able to afford that. You don't want to be house poor when you move into this beautiful new home. You want to be able to enjoy it and still do everything else you like to do before. Just know insurance is available. We can insure pretty much anything, but some areas are going to be more expensive. Not all areas are going to have preferred markets available. So you may be looking at surplus lines, which are non-admitted carriers. They're not regulated by the state. or you could be looking at Fair Plan, and Fair Plan should only be used as a very last resort. If you have any questions on that, I'd be happy to explain why. It was never meant to be insurance for the everyday customer. It was meant to be for those who can't absolutely get it anywhere else. So what is covered with homeowners insurance? Obviously, the cost to rebuild your home. We recommend that when you're shopping for your insurance policies, make sure it has at least 150% extended replacement cost if you can still get it. That way, if your home is to burn to the ground, there's a bunch of homes in your area that burned, it's going to raise those rebuilding costs up. That extra insurance will help you meet those goals before you have to go out of pocket to pay for that. In addition to homeowners insurance, you also have your coverage B, which covers any additional dwellings that are on your property up to 10% of your policy limits. It covers your personal property. So that's going to be everything from your toothbrushes and toilet paper to your couches, your beds, your dining room set, and grandma's china, whatever you might have in your house. It's also going to cover liability, which is one of the most expensive or most important things to have. If you get sued, you don't want to lose your house because you didn't have enough liability insurance or because you didn't have homeowners insurance. It also covers loss of use. If you are burned out of your home or there's some other kind of loss that makes it uninhabitable for a while, loss of use will help pay for you to live somewhere else while your home is being fixed. When should you shop for insurance? Yesterday in this market. Gone are the days where someone could call and say, oh, my client is closing tonight and they forgot to shop for insurance. Can you get something for me? 2 years ago, absolutely, we could have done it. It's a lot more difficult right now. Preferred markets are sometimes taking longer to get quotes back to us. They're requesting more underwriting information. And that's if they're willing to quote it all. Like I said, it is a little more limited right now. Surplus lines could take 2 to 3 weeks to get back to us. So as soon as you've identified that house, call your broker, call your agent, and get those quotes started. Excuse me. If you are shopping for a condo or a townhouse, there is insurance that covers the exterior of the building, but you're going to need a condo policy. You're going to need coverage for the walls in. So everything from the sheetrock in to cover your flooring, your cabinets, your toilets, your fixtures, as well as your clothing and all of your other personal items. Condo insurance for some reason right now is even harder to get than homeowners insurance. The only preferred market we have left out of the over 40 carriers we usually write with who are either on pause or left the state. Mercury is the only one that we have that's still writing condos right now. And they're reaching capacity in some areas. So again, shop early and don't shop online because you're not going to get the same kind of service. If you have a problem, you're not going to get the same kind of help when there's a loss. So find a broker local to you and develop a relationship with them. We're here to help you. We're here to be your advocate. If something goes wrong, we hope it never does. But if it does, you want to have somebody on your side. One thing to know too, and there's been a lot of talk about this lately. The NHD reports, and Annette, I believe, is going to talk about those in a little bit. Those are for a completely different side of the homeowners market. The carriers, the insurance carriers, all do their own fire score underwriting. So that's another thing to take into consideration when you're shopping around. So talk to your realtor. They, I'm sure, have personal relationships with some of the different agents in different areas, and they can definitely direct you to someone that can help. And one thing I want to mention too, for anyone that's shopping, if you call our agency and we don't have a preferred market that has availability in the area you're looking to buy, please don't get offended if we ask you to try AAA or Farmers Insurance first. We know that they're open in some areas that our other preferred markets are not, and we would much rather have you get a preferred carrier to cover your home, probably pay less insurance, than put you in a surplus lines market that's going to charge you a lot of money. It's going to be a good policy, but it's going to be more, and we're looking out for your best interests. So if we have that discussion and advise that, please don't take advantage or please don't take offense. We're trying to take care of you first.
I love that you do that, Stacy. I know that you've had that situation just with me recently. So one of our first webinars, we talked about partnerships, and it's these types of partnerships that really help allow us to provide you with the best service and help you. So thanks, Stacy. You're going to hang on just a little bit. Hopefully, it looks like we've got some questions lined up here. So
Yep.
save that here for the Q&A session. Oh, and I went back instead of forward. So here we go. It is my pleasure to introduce Annette Kalik tonight. Annette is going to cover the first part of our debunking disclosures this evening and talk specifically about an NHD report. And I can't wait for her to tell you what that acronym means as we get in there. But Annette is with JCP LGS Disclosures. And Annette, I will turn it over to you.
Great. And can you show my slides, or are you gonna? Oh, perfect. Okay, great. Awesome. Hi, everybody. I am Annette with JCP Natural Hazard Disclosures, and thank you for the opportunity. This is great. I love that they are offering this. This shows that they go a step above and beyond the normal, and they want to educate you. And so I would like to tell you what a natural hazard disclosure is and why it's important and why you need it. So the natural hazard disclosure, which we refer to as NHD, is a legal disclosure form that's required in California for almost all home sales. NHD reports indicate if a home is located in an area that is prone to flooding, fires, earthquake, or seismic activity. So you're going to get a report, and one of the first few pages is going to show 5 items that they're looking for high risk to protect you, so you know what you're buying in. If the property is going to have the geological report, and it's for your best interest, it's for the seller's best interest, it's to protect everybody. If it says it's in a high risk, it doesn't mean that you shouldn't buy it. We're just letting you know what's there. Next slide, please. What is the purpose? This is to protect both the buyer and seller. Seller to release handoff liability, and a buyer to be protected by knowing what they are taking on. Property tax liability. This includes a state mandated notice of special tax. So for example, Mello-Roos, our report's going to show you how much are all of your taxes with the breakdown. If it's Mello-Roos, it's going to show you the expiration date. It's going to show you the amount, how much the total is, what's covered, like everything. So you're going to have a little cheat sheet of everything on that property. Next.
I'm not a very good clicker tonight.
What else is in the report? Well, okay, so California Association of Realtors, which we refer to as CAR, they require this natural hazard disclosure report in California. California is the only state right now that requires it. They're starting to kind of seep out into Arizona and Nevada a little bit, but it's not required there. They're just starting to. And the reason we do this again is so that it's full transparency. What CAR requires is the natural hazard disclosure report and the tax liability. But we always recommend you go a step further and get the environmental screening. So that would be things like, such as Megan's Law, the underground storage tanks. So I kind of look at natural hazard disclosures as the natural disclosures, high risk disclosures. The environmental screening is more the man-made, and again, doesn't mean you shouldn't buy the property. We're just letting you know. And for example, with earthquake, the fault line in Napa, the big Napa earthquake they had recently, the homes that were affected the most were not actually on the fault line. So you never know, it's Mother Nature, right? So we just give you, we disclose where we get all of our information so you can see it, and not to worry, you have your agents who are here for you, and we are here for them. So if they have questions, or if you want to talk to us, then we get on a 3-way and I can help you with any questions that you have. Okay, next.
That's great, Annette. Thank you so much. We're going to come back to you. We have some questions about the NHD report. And so Anthony and I are going to take over a little bit of the next part of debunking disclosures. So really what a disclosure is, its very foundation, is just telling you what we think that you should know, or the items that you should know. Sellers are required to fill out certain documentation that conveys and tells you all about everything that they know about that home. They've lived there. We want to provide that information. So that's one part of disclosure. Annette talked about the natural hazard disclosures. Well, there's a lot of other pieces that go into those disclosures, and sometimes you need more time to review them. So when we take a look at this section of the purchase agreement, so this is just a sample of page 2 of our residential purchase agreement, you can see that there are a lot of line items here that can seem a little bit foreign. But what this allows us to do is it allows us to give you time to review certain items so that if you discover something as part of that disclosure process, we can protect your earnest money deposit and help you to get that back. Anthony, anything that you'd like to mention about this section?
I was just going to say the same thing, that we want to be clear about that we're within the contingency period for inspection. So if we do find something in our inspection and we're within the contingency period, we can go through the steps of, do we want to move forward from here? How do we want to rectify this situation? Do we want to ask the seller if we do find something in disclosures that becomes an issue or that bumps you off the property a bit? But we do have time then still within the contingency to possibly back out. So you still have a little bit of room there. We're not locked in for sure when we're still within the contingency period.
Yeah, and that's great. And that contingency period, we would specify it with the number of days. There is an option to remove all of those contingencies. But for example, if you take a look here, next week, we're going to talk about escrow and title. But here you get a preliminary title report that you get to review. So we can specify how many days you have to review that. There's also an item in here that said review the seller documents. So there's an item that's called the seller property questionnaire. So they actually have the chance to fill in that information. And if you take a look at section 6A, it asks the question, has anybody died in this home? So maybe you don't want a home where someone's died. So within the last 3 years, you're going to go to section 6A, or we're going to go to section 6A to see what we can do to call that out for you. So we are not trying to kill you with an eye chart tonight. Just wanted to provide you an example of what that page 2 looks like in the residential purchase agreement to help give you just a little bit more insight into disclosures and how that all works. All right. So Anthony, anything more on disclosures or contingencies?
That was very good. I thought that was very succinct and to the point.
Thank you.
As always.
All right, perfect. So we do have some questions here. We're going to put Annette and, all 4 of us really get put on the spot with some of these questions. So, Stacy, lately there's been a lot of talk of insurance in California being a bit more difficult. I mean, there's even a contingency like we just saw. There's a special place where we can put in a contingency for insurance that covers that specifically. So why is it more difficult, and why we're seeing the increased cost over the last year or so for insurance?
So this all started back in 1988. Voters voted in oh gosh, I'm blanking out on which proposition it was now because there's been so many. But they voted in a proposition basically that regulated insurance in California. And for the most part, it worked pretty well. My dad at the time, I remember I was in college, and he said, this is going to come back to bite us someday. And it's biting us right now.
I wish I would have had that insurance, bike insurance. I need that.
Yeah. So initially for a while, it worked pretty well. We had the Oakland Hills fire in 1991. And that was like one of the first big events that we saw in California where a community burned down. And we didn't really see a whole lot of that again. But now fast forward to 2017, you've got inflation. You've got multiple communities that have burned since then up and down the state. You have a lack of labor, like I said earlier, to rebuild. Supply and demand, supplies were not coming in. COVID hit, that made everything a whole lot harder. And meanwhile, we've had an insurance commissioner, over all these years who've tried to keep our insurance rates low, and they have. Our insurance rates in California have historically been extremely low compared to all these other states that are around us and even on the East Coast. I have friends that have moved and they had sticker shock when they moved at what they were going to be paying for insurance. So we've had it really good for way too long, and we're now trying to play catch up. It's costing a lot more to rebuild your home if an event happens. And if it's a whole community that's burning, that just brings those costs to rebuild up a whole lot higher. So because a lot of these carriers have not been able to get the rates that they've needed the last few years, in order to pay claims, they have to make a profit. They've got to have money to put aside so they can rebuild our homes. They weren't able to get that. So as we know, there were a few companies actually before State Farm even pulled out that had already left California and started just not writing new business. And now the companies are trying to get the rates that they need to go forward. And so some of them have paused, some of them have left the state altogether. And the rest are being very particular with the new business that they're taking in. So if your home is over 50 years old and it hasn't been completely renovated, you're going to have less markets to shop for with that, and it may cost more. Location plays a big difference. Middle of Livermore, you're probably fine. Like I said earlier, Pleasanton Ridge, Danville, Alamo, Lafayette, Moraga, Orinda, Oakland Hills, it's going to be a little bit harder. Insurance is available. You just might be paying more depending on the location. And I don't want to, scare anybody. I just want you to be aware that insurance may be expensive. So get on it right away. Call your broker, call your agent, get those quotes going, and make sure that you're going to be able to afford the insurance as well as the house. If you're concerned about wildfires, things like that, then maybe you want to shop in a little less risky area. But homeownership is worth it. You've got a great team here that's helping you guys. So, reach out to us, reach out to them with any questions at all, and we're happy to help you.
Great. Thanks, Stacy. Great information. All right, Annette, your turn. So one of the questions that came in that said, how much does an NHD report usually cost and who pays for it?
Good question. Thank you. So with our company, the most complete report, which we strongly recommend, is normally $123.95, but I give them a special price of $99. So normally the seller pays for it. And it's nothing compared to the price of homes these days, right? And you want to make sure you have all of that really important information, your tax information, what your soil is underneath. Are you in a high fire zone? Are you in a high flood zone? Even the flood zone, if it says yes on the report, we give you an extra little piece that's called a flood certificate that the lenders use. CoreLogic was the name of the company that provides this. And it'll tell you, for example, the lender's not really concerned if the she shed is on the high risk flood zone or the fence line. They want to know if the structure, the home, is in that flood zone, and the flood zone is based on elevation. So the she shed might be a little bit lower than the home. So that can determine if you need flood insurance or not. So we'll provide all of that. And then again, of course, the insurance has their own way to calculate everything, and the lender may too, but we're trying to help you get the answers right away.
Great. Thanks, Annette. And thanks for the $99 deal. I appreciate it.
Yes, absolutely.
So Anthony, there's one that came in for us, and so I'll let you speak first. So, somebody asks, how do I know how to read all of these reports, right? So you and I are used to seeing NHD and SPQ and TDS and all of these other acronyms every single day, but our first-time homebuyers are seeing these for the first time. What are some of the things that you do to help them through that process?
Well, even for me, sometimes it's like a lot of papers and my brain just shuts off and I go into daze mode. But it's important to go through it very systematically. For me, I can go through there and pull out what I think is pertinent information and share that with you. I advise you sit down and read it and take it in, and then come to me with your questions that you will inevitably have, and I can answer them for you. And we can get we can get you to where you need to be, so that you understand what you're seeing, what you're reading. And again, it's all in full transparency, and we want to be fully transparent when we're going into buying real estate. Like I said earlier, it's a big step. I've said it every time, and we want to be on your side. We're on your team. So we're going to go through everything with you Don't be afraid to ask questions. Other than that, I would always just rely on Glenn if I didn't know the answer.
Thanks. But to that point, I mean, great answers. Is that many times, like I'll look at a home inspection report, for example, on a home. Someone will say, "Hey, I love this home. I want to take. I'm interested in putting an offer." So that's when I go in and I'll take a closer look at the information available to us. But I'll look at a home inspection report and it might say that GFCI needs replacing. Now, for those of you who aren't used to this, that's just a little outlet with buttons on it. To me, that's not a big deal. But you know what? To my clients, it might be a huge deal. I had a handyman business for 3 years, so I see this stuff and I'm like, no problem for me, but it could be a big deal to them. So I always encourage my clients and buyers and even my sellers, right? If they're getting one beforehand, before it's getting to go on the market, it might be worth it for them to do some of those repairs and fixes and take care of some of those items before it goes on the market so that it lessens the chance of losing a deal or somebody getting cold feet because of what it says. But I'm going to admit it right now. I use a lot of paper. I print stuff out. It's easy for me to go through it with my red pen and highlight or circle items that are important to me. So many times I will encourage my buyers to do the same thing, because then they can bring it to our next meeting together and say, "Hey, I've highlighted some of these things I had questions on," and then we're sure not to miss anything.
Yeah, awesome. You want them to ask you, right? You want to
Reach out. That's why we're here. All right. Annette, so you mentioned it a couple of times and you said Mello-Roos, and it was identified as a tax. Can you tell us a little bit, maybe expand a little bit on what a Mello-Roos is and what types of areas we might see those in today?
So we started seeing this when they had new developments, and maybe they wanted to have better schools, additional schools, more parks, more lighting in the city. It's supposed to be used to make that neighborhood a better neighborhood with more opportunities for the homeowners. And so whenever I lived in an area in Antioch years ago when they first started this, it was like $250. It can go all over the map. It could be $50. It could be $450. It just depends. And now things have went up, like we're seeing. And sometimes it's for 5 years, sometimes it's for 10 years, sometimes it's 15. So that's why our report gives you all of those details right there. And it's funny, you were talking about, really, you should read it. And I'll give you guys a quick funny story. When I bought my last house, I wasn't a natural hazard disclosure rep, and I've been here for over 10 years. But back then, when we moved in, this airplane, went, and I was like, what is that? Well, if I would have read my disclosures, I would have known we were right by an airport.
Yep, exactly. Right. And many people will say, "Gosh, that's 86 pages. I don't have time to go through 86 pages." I encourage you to make the time to go through those 86 pages. But,
exactly.
And just going back to the original question that came through, that areas with Mello-Roos are like Mountain House today, like Oakley, so it's newer communities, and they use those Mello-Roos. It's a fancy name for the taxes, because I'm sure there was a court case at one point with Mello-Roos, and right, they use those fees to build fire stations and infrastructures and help to improve that area until it can be established, and then the Mello-Roos will drop away and it's just covered with your regular property taxes.
Correct. Yes.
All right, over to Stacy. So this is a great question that just came in. Are you going to pull their credit? Right? Someone said, "Are they going to pull my credit when I apply for home insurance?"
So technically, they're not checking credit. They are, however, checking to see if you've ever filed an insurance claim on any homes you've owned previously within the last 5 years. They're checking to see if the sellers have filed a homeowner's insurance claim in the last 5 years. There's all different kinds of things that go into rating. So credit, not really, unless you've got something big and glaring out there.
Great. Anthony, so question for you. Have you had any challenges, either personally or with clients, when it comes to insurance?
Yeah, I'll talk about this a little bit. When I bought my first home, it's just going to be a personal story for you. we're in the kind of the hills. That home is in the hills of LA. And we recently got a letter. I guess it's not so recent now, about a year ago. And it said we needed more insurance. We had to find more insurance to cover basically that we didn't have enough based on their new assessment of the area and what have you. And we were not able to get that very easily. We had to go through a bunch of people at that point because we bought back 2019. Insurance companies had started pulling out. And so we had a really rough time finding some additional coverage that we needed just because of where we are in California. We did, however, find it and we got it. And, you know, I'm in this business, so thankfully I had some relationships built, so I was able to get where we needed. But yeah, that's, you know, if I wasn't in real estate, it would have been a little more scary. But again, that's why we're here, and we can lead you to the right place.
Yeah, and don't be scared. I mean, that's the thing is, and you know, Stacy, you said it. It's not insurance impossible. It's
Yeah.
just insurance challenge. Right. I've had
Yeah.
just recently, right? I had a condo for a client, and they were having a difficult time getting insurance, but they were able to get it. I have another home that's located in the Oakland Hills, and that's difficult to get insurance. And then so it's not insurance impossible. I can't even say it. It's just insurance challenge.
Awesome.
Yes.
We're
Insurance-
hoping in the next year and a half, it's going to get better.
It will
Yeah.
get better, Stacy, right? It will get better.
The companies are starting to sound a little more positive. So
That's good to know.
Yeah.
All right. So I have the pleasure of meeting with Annette and Stacy on a regular basis, and one of our sessions that we got together with, they actually talked a little bit about, and I think Annette, you mentioned, and both of you actually mentioned, like the fires that we experienced a few years ago that just ravaged the state of California. And I was fascinated to learn that, you know, you like on a map, this section or this home might be in the fire zone, right? Dry grasses and all of that kind of stuff that makes it, you know, you get a really bad high score on the fire zone map. But that homes that were concrete jungles were also appearing on the map as being high fire zones. And I was like, well, that doesn't make any sense. And then, so do you want to tell them why this has happened as a result of the fires that we saw recently?
Sure. You want me to start, Stacy?
Yeah, go
you
for
can
it.
start. Go for it.
Okay. Actually, last week we just had a class on this, and we had a defensible space inspector come out and speak at Bay East, and Stacy was there, so we were together. And what they're trying to do is, back in the day, let's say the Oakland Hill fire. On our reports before, they would only tell the people that were in the very, very high risk area that they were in the very high risk area. But what they've noticed with all these fires going on, and I'm sure lawsuits, is the neighboring homes just a little bit over are now at risk too, because the embers are like the little sparks from the fires that, if the wind is blowing, will blow to the next neighborhood. So now they want to make sure that that neighborhood is also aware. If there's a fire over here, you may be at risk if the wind is blowing your way. So you need to be careful. So what they are looking at is they really want to make sure your homes have really like 100 feet of space where there's not like if a tree is hanging over and then there's a fence hanging over the tree, and let's say the fire starts way away, but it catches the tree on fire. If the tree is hanging over the fence line's going to wrap all the way around and go towards a house, right? So now if the fence line is touching another tree closer to the house, or the roof line is touching the fence line, you see where we're going with this. They're trying to make sure
Dominoes,
you have
right?
a
You knock
defensible
over
space.
You
What's
knock
that?
over it's like dominoes. You knock over one
Totally.
domino and they just keep going.
Yes, so they're trying to, for everybody's safety, clear the area of the house. If you're in a very high risk area, it's better to use rock than bark, because bark is shredded or pieces of wood chips, right? So that's highly inflammable. I heard last week, I found out that cypress trees and what's the other one? Juniper bushes
Junipers.
are highly flammable. that the cypress trees are like sponges to the embers, and those are very flammable. So these are the things that if you're in a very high or high fire zone, I won't go into more detail, try to keep it simple. They require a defensible space inspection that is free at this point. And the fire company will come out, the fire inspector will come out and tell you, hey, you need to do this or that. If that happens, they give you so many days to fix it. And she mentioned, like, rarely will she ask a tree to be taken down unless it's dead. She'll ask you to clean it up. And she said most agents that have a home going on the market will make it all look pretty anyway. So she said 80% of the time, she won't ask you to do anything with the tree because it's already done, but she wants it shaved nice and pretty so she can walk below it. They're just trying to make it clear, a clear space. So it's for your protection. And I'm sure Stacy has more information because insurance has separate guidelines than the defensible space inspector. Take it away, Stace.
I will do. So, yes. So it used to be that the companies were mainly concerned about your high fire risk areas. And again, like those areas I mentioned earlier, but we're now starting to see all of the carriers doing inspections on homes that are within city limits, middle of Livermore, East Pleasanton, things like that. What they're doing, they're using satellite imaging and technology to where they're now zeroing in on roofs, and they're looking at roofs to see if there's any mold or mildew on those roofs. They're looking to see if the gutters have not been cleared out, because believe it or not, plants can grow in a gutter if it's not cleared out. Leaves can collect. Those are a debris hazard. When we had the fires here 3 years ago up on Mines Road and kind of went over towards Tesla and all of that, the event for that fire was very similar to what they had in Santa Rosa with the Tubbs fire. And I had a couple of firefighter friends who made some comments that made me kind of question where they were going with it. And so I asked them, I said, are you concerned about those of us here in town? Because one of them had told me to move my horse and have go bags ready. And I'm in the middle of Livermore, I'm by the lab. And he said, yes, he said, we're supposed to have dry lightning tomorrow and we're supposed to have high winds, and this could turn into another Santa Rosa event. So they're now looking at things in town. So when you're shopping for a home, if you're seeing any of the maintenance that Annette was talking about, go ahead and buy that home if you're falling in love with it. Just, we want you to have the home that you love, but do some of that maintenance as soon as you take possession of it. Clear those trees, clear those bushes, make your home look neat and pretty, and you should be good to go, hopefully. And hopefully we never have an event like that here, but the carriers do want you to be aware of that. All of the insurance carriers now are doing inspections on their new business, so just be prepared. It's not like the old days. They are going to contact you and either send someone to look at your home from the front and sides. They may need to go in the backyard. So don't, if you're remodeling, don't keep debris in your side yard, have it hauled away right away, because that's the red flag to them. Just, keep it good. Also know that in a fire zone, that with the maps that the companies are looking at, the house on this side of the street might be a red flag and it might be a no-go, and you're going to have to do surplus lines on that one. But the house right across the street might be a green light. So you just don't know where you're going. It's, they're trying to make it better. Like I said, another year and a half, hopefully we're going to see some improvement in the areas, but they've, allowed everybody to be lax for too long. And now they just want everyone to kind of clean it up so we can all be safer.
Yeah. And Anthony, I don't know if you remember that Shannon, who did our inspections, he talked about like simple things, cleaning your gutters. So
The gutters
here's
was
just
cool.
another, right. Here's just another time where keeping up with your maintenance on your new home makes a difference.
And he did
Yeah.
say, like, it's just a bit higher responsibility when you own a house, when you own a home. He kept saying, welcome to home ownership. But what he meant was, there is a bit more to do. And that's, it's something that it should be, I'm honored to take care of my house. So hopefully the new homeowner will also be.
It's one of your biggest investments you're ever going to make. So take care
That's
of it.
right. Well,
Can I
Annette,
add one thing too? Oh, sorry.
sure, go.
I was just going to say too, while we were talking about premiums and stuff earlier, keep in mind, a good way to keep your premiums down and get more discounts is bundle with your auto policy if you can, or move your auto to wherever your homeowners is going to be. and go with the higher deductible. Nobody should be looking at a deductible of $500 or $1,000 anymore. Go to 2,500, 10,000, or 20,000 if you can. You will see some significant savings that way.
That's
Cool.
great. Yes,
Yeah.
thank you. Well, Annette and Stacy, thank you so much for joining us tonight. We appreciate you and your expertise and all you do. We couldn't do it without you, and we love having you as partners in our business.
Thank you so much, you
Thank
guys.
you for having us.
Yes,
Yes.
we appreciate you. You guys rock.
And
We're
then just
Go ahead.
no,
No,
I
I
was
was
just
just
gonna-
going to say thank you and call with any questions.
We will. So just to let everybody know, next Thursday, April 25th is week 4. It's getting ready to close. So we're going to hear a little bit from the experts about what to do now that you've in that home, you've got insurance, you've cleared your disclosures, everything, your contingencies have been released, the funds are getting ready to fund, and the fund gets to begin at that point. So we're going to talk a little bit about what that process looks like. But Anthony, I don't know if there's anything you want to say before we wrap things up here tonight.
Covered it all, sir.
Wonderful. Well, thank you all for joining us. We hope that you have learned a lot, and we certainly enjoy bringing this to you. Thank you and good night.
For
Thanks
joining
for having us. Good night.